Welcome to the program, Mr. Abhay Surya.
Thank you.
To begin it, I would like to ask you actually what is happening at the Colombo Stock Exchange.
Well, I would put it, well, for the last 18 months or so, the markets have been coming down continuously or precipitatively. This is a phenomenon which is very much to do with a global situation because investors are moving away from emerging markets to more safer havens like US market. There are several factors that are affecting, but just to give a perspective, we have seen the Chinese market coming down, I think about 33% during the same period, and also markets like Singapore, Japan coming down by about 21%, and also even Hong Kong 27%, India likewise. So Sri Lanka, what we have seen is during the last 18 months, 11% decline. So we have to put everything in a perspective. What is happening is a global phenomena, and the reasons for this is multifaceted. I would say the declines are coming from the uncertainty that was created about Chinese economy, because the Chinese markets have been continuously coming down, and why it came down is the people started worrying about whether there is issues in Chinese economy. So Chinese economy is very much impacting the global economy as well, because being one of the largest economies in the world, when a major economy is having issues, that affects the global economy. So that uncertainty made people run away from the emerging markets, because China is an emerging market, to developed markets.
But when you look at our Colombo Stock Exchange, it is more retail driven. So how do you analyze this situation?
Yes. Now, in a market, you have different types of players. One is foreign investors. Then we have institutional investors. In Sri Lanka, most of the institutional investors are captive. They are like EPF, ETF, NSBs, SLICs, mostly government-owned entities who are managing pension funds, provident funds, or savings institutions or insurance, as well as the private funds like insurance companies and unit trusts. So when you see this kind of trend, any fund manager who's managing these institutional funds as well will not really jump in to a market when you know there is a very strong possibility of market continue to come down. So if I am managing the money, my responsibility is to the investors of my fund. I have to look after their interest, and I will most probably even exit with the intention of buying back later on. So fund managers are always look after the interests of the funds.
Then what are the options that we have to revive this situation?
Okay, so yeah, answering your question, retail investors will run away as soon as you see continuously a market dropping. So when you have foreigners leaving, you have institutional investors who are not really coming to the market because they see further drop, and retail investors obviously won't come in. So what can we do about this? This will change as everything that comes down goes up, or like everything that goes up will come down. Those are fundamental norms or reality. So in Sri Lanka also, once the valuations become very attractive, the people will come in. So every market goes through corrections, and what we have is a major correction in the global setup, which Sri Lanka is also very much part and parcel of the global scenario. We are very, very tiny compared to if you take even emerging markets or frontier markets. So this correction will happen, and people will see, including the local institutional fund managers, real value. Foreigners will see value. So first, I believe local investors will come into this market, local institutional investors. They will start picking stocks which are properly valued, where they will see significant upside. So this valuation is the key, not the price. So when they see value, they will start buying into those stocks, and then the market will turn. There's another thing that easily can be done. That is listing some of the state-owned enterprises, SOEs, which can easily turn this market. So the government has to make that political decision whether they want to list some of the.
They have been talking about this for a while now.
That was there in the Prime Minister's economic statement as well as in the budget. So they were talking about Lanka hospitals, they were talking about anything that is not strategic. Government should be getting out of those businesses. So which is a very good decision. It's a question of when it's going to happen, because the sooner the better. So as soon as that happens, you will see a turnaround in the market.
If I ask you, is it a right time to buy shares for the investors?
As I said, for any investor, what you should be looking at is value. So you need to have a professional investment advisor or a company you are properly advised. If you look at a lot of people, they have lost money. Why they have lost money? They are not having proper advice. The advice is coming where it's largely the price-driven advice. Okay, this will go up in price. On what basis? What is the investment thesis under that? Is not being challenged or asked. So I think the key thing is investors, I hope, have learned a very strong lesson, having lost money. So if you look at some of these clients who have lost money, the portfolios are all junk stocks, very, very poor quality stocks. Some are like PC House or Greg or some very, very poor quality stocks. So they are not having strong value. Now, strong stocks, I could easily say, just Texas Jersey, Lanka Aluminium. Those are very strong stocks, which has strong potential, good management, a lot of fundamentals supporting it. So if you collect good stocks, you can't go wrong. And at the time it is fully valued, you have to exit. Now a lot of investment advisors give advice to buy, but most of the investors never get time to sell. Everything, if you buy it in the proper valuation, when it's undervalued, you buy it, and it is fully valued, you get out. However good the company is, that's how you make money in the stock exchange, stock markets.
Yeah, it means the investment advisors have a huge role to play in this scenario.
Absolutely, they have to be supported by the companies. All broking companies should have a very strong research house who do economic research, fundamental research of the companies they are recommending, technical analysis, market sentiment. Now today we know what is the sentiment. Sentiment is really negative, so people are not going to jump into the market. So if you don't look at all three aspects and advise properly, the research has to advise the investment advisors in turn to clients, they can avoid losses or minimize losses. And also investors has to know their time horizon, whether you are investing for the day, a month or 3 months or 1 year or 3 years. So depending on the time horizon, the investment advice has to be tailored. He should get the right advice based on the client's requirements. So that if you are investing today for a day, I would say don't put a cent in the stock market. So you are going to lose money, because tomorrow it will be a little bit lower than today. That's what we have seen for the last so many months basically. So you have to be investing for maybe 3 years. Then you can pick some fundamental value stocks, as I mentioned. That is where the investment advice and the research-backed proper advice will come to the client.
If I suggest to you that we need some sort of a coordinated effort to revive these situations and revive the confidence of the investors, do you agree?
I would say yes, but not intervention. Now, what happened in China is where the government started directing captive funds to invest in the stock market. You can do it to some extent, but you go and do it too much, then the whole market crashes. And now even the SEC chairman of China has been asked to resign, or he has already resigned and a new person is coming. So you can see it can lead to much more detrimental or bigger impacts if you try to intervene in markets, because markets are driven by demand and supply. It's not and people's expectations of economy. Now in Sri Lanka, if you move into Sri Lanka, now I talked all about global city. We have also issue where last budget has not been able to give a clear direction how the government finances are going to be, particularly in terms of fiscal management. We don't know whether the government will be able to meet those revenue targets. So there has to be some sustainable level of revenue for government to continue all the expenditure, capital expenditure what they are proposed that they will be incurring. Central highways and all kinds of various highways that will be built, and various expenditure targets will have to be, or revenue targets will have to be met to meet those expenditures. So I think that's where the key concerns are coming from, because investors, any proper investor will look at the future cash flows that a company can generate from that from the business they are in. So what they do is, future cash flows are discounted to today's value, and you look at that value you get versus the market price. Now if the market price is lower, you will buy the stock. Now that discount rate is where you have a decision to make a decision whether, if the macroeconomy is doing reasonably well, whether you should be investing. Now what happens when the macroeconomic uncertainties become too much, you put in a bigger discount rate, much higher discount. So obviously the value is less. So if I have much more confidence in the economy and seeing, okay, companies are going to make a lot of money, and those money I discount at a lower rate. But if I am uncertain about the economy, I will have a higher discount rate.
It means we need clear policies.
Definitely, we have to get our act together. 2016 budget is one of the critical issues. We need to see really the macroeconomic fundamentals getting back to some kind of a stability. So I think it will happen. I am very positive about government getting the act together. Hopefully by April or end of April, we will see some major changes happening, where there will be clear direction to people to understand where the government is heading. Right.
Before we end, I would like to ask you, what is your message to the investors?
I strongly believe investors should first of all identify honest investment advisors who has their interest at heart. Number one, somebody who you can trust, who will be able to give you the right advice and make money for you. Number one, if you can't make money, if the investment advisor has lost money for you, that is a message that you should start thinking out whether I'm getting the right advice. That's the most important. And then ask the right questions. You as an investor also has to be educated, understanding capital markets. A lot to learn. If you are not aware about capital markets, you should not be directly investing in the capital market. You should hand it over to a professional like a unit trust to manage your money. You should not directly go in because you don't understand how to value a company. If you don't understand and ask right questions from investment advisor will take you for a ride. So those are the two most important things I could recommend. And pick stocks which are rightly valued. Don't jump into the market straight away, but hand pick good undervalued stocks, and nobody will go wrong if you take a long-term time horizon of 3 years.
Thank you very much, Mr. Abhi Surya, for your time.
You're welcome.